This is the lowest it's been in 23 entire months. I guess that's a good thing. All right, Bitcoin, Ethereum trade flat as the June CPI report clocks in at 3%. Leading currencies rose slightly following the figures, which indicate that inflation continues to cool, everybody. Continue to trade flat at roughly 31,700 on Wednesday after the June inflation data, reflecting a CPI increase of 0.2% and a yearly increase of 3%. Ethereum also faced a minor gain there as well, 1.3%. Meanwhile, core CPI, which discounts food and energy, due to their known volatility, rose just 0.2%, which is the smallest 1 month increase in that index since August of 2021. I like how we're going back 23 months. This is the lowest it's been in 23 entire months. I guess that's a good thing. Since March of 22, the Fed Reserve has rapidly risen its policy interest rate in a mission to bring inflation back to its 2% target in the U.S. after peaking last June at 9.1%. While we all know it spent several months in double digits. I mean, we saw how they were playing with the data. Oh, food. Well, it's only going to be, this much of the inflation pie. Oh, cars. Well, cars are going up. Well, guess what? We're going to shrink the effect that cars have on core CPI and all these things. It was just a lot of massaging of data. I think we all know inflation was 10% plus for several months, maybe even half a year or longer there. All right, 2-year treasury yield tumbles after June CPI is less than expected. It slid 14 basis points. The 10-year yield fell 10 basis points. Yields and prices move in opposite directions. 1 basis points, of course, equals 1/100% there. Gensler has it with the 50%. Tim, where are you first born? All right, back to what are we talking about here? The 2-year treasury yield and the 10-year yields. Markets are widely pricing in a rate hike from the central bank at its next meeting, and policymakers have indicated that this may not be the last rate increase of the year, depending on the data. Investors also be following remarks from Fed speakers, including the Fed President Tom Barkin and the Minneapolis Fed President Neil Kashkari for fresh hints about the policy outlook on Thursday. So we're going to wait for the remarks, assess the details. It looks like 225 basis points. I think that's what the prediction markets are saying. We'll see if that ends up playing out. All right, crypto investment products see massive institutional inflows as Bitcoin, ETH, and XRP products lead. XRP's on the list there. Last week saw $136 million flow into investment products, marking a robust period of growth over the past 3 weeks. Total of $470 million reported in digital assets during this period, offsetting the outflows of the past 9 weeks. So it looks like we had 9 weeks of outflows, and now we're flipping green. Now money's starting to come in. Products betting against Bitcoin, meanwhile, did see outflows, while ETH investment products saw 2.9 million of inflows. So this is betting against Bitcoin there. Other notable altcoins, so Solana, XRP, Matic, Litecoin, Aave also saw inflows. Atom and Cardano, minor outflows there. So not looking good for the Cardano folks like myself. Okay. All right, tokenized U.S. Treasuries surpassed $600 million as crypto investors captured TradFi yield. So it looks like effectively lend $614 million to the U.S. government via different tokenized treasury products. So we're seeing the real life tokenization of assets, with the big Fed moves and, all the hundreds of millions and the billions that are moving, they are starting to tokenize. So it isn't just a fad. If they're like, Bitcoin, isn't that just for scammers? No, tokenization is a real movement that is happening across the globe here.